So now let's talk about market structure. Yes, I kept it here yesterday. Is it yesterday? Yes, yesterday for you guys. Now let's extend market structure. You can see all my wins, all my win trades. They are much. Everything are just wins. It's not just today. I have this SL. But just imagine you make 1,000 pips from here, you make 3,000 pips, you make 2,000, you make 400, you make 600, and you just come and make how many? Just come and lose how many pips here? 15 pips. So what is this? So should I be complaining that I eat SL today? No. Right. So I'm still happy. I'm still profitable in the market. Right. I've secured a lot of wins, secured a lot of win trades, and I just hit one SL today. So what should I be angry for? You get, so I'm still profitable in the market, and people that are taking my signal, sure to they are profitable if they use risk management. Right. So that's another talk for another class. Risk management is very, very important. That if I'm still on another class. Now, so on that market structure, no, I'm not going to spend this for this. It's going to be hanging. Okay, on that market structure, that's what the main trend of the market, the trend inside the main trend, right? So let's talk about trend line first. Trend line, where should I write it? Now let's talk about trend line. Trend line. So how many are we? Are we increasing or we're decreasing? Let me check. We are decreasing. Why? So trend line. So in trend line, we have three types of trends. Right? We have three types of trends. And you can't just enter the market without knowing what trend is the market. Hope you understand. We can't enter the market without knowing what trend is the market. So we are going to be looking at three types of trends. We have the uptrend, and we have the what? We have the downtrend. Right? And the last one, we have the sideways trend or the range trend or region trend. Anyone English? Range trend, right? Trend. Yes. So these are the main type of trend. We call it sideways. I like to call it is ranging. Market is not moving up, it's not moving down. So we call it ranging trend. I also call it the sideways trend. Okay, now let's talk about uptrend, right? So uptrend is a sprinting series of higher highs and higher lows, right? Breaking each highs. No, let's start from down. Let's start from like this. Most of you don't know how to draw proper trend line. This not breaking the high, the low, sorry, and breaking the high again. So this is how uptrend is. Hope you understand. So now, market is moving up when it's creating series of high highs. So now this is what we call high highs. This is what we call high highs. Let me use capital letter. Right? And this is what we call lower low. So higher low. Guys, I think I have to be very fast now. Yeah, sorry about that. Right? So we don't just stop halfway. So now this is what we call high, higher lows. So in every uptrend, you have to see a break of structure. Hope you understand. Market breaking its previous high and new high. That is what we call higher highs. Right? So market not breaking the previous low and creating another low that is higher than the previous low. That is what we call higher lows. Hope it's clear now. So in a trend, we have three types of trend. Let me come again. We have three types of trend. You have the uptrend, you have the downtrend, and you have the ranging trend. This downtrend is always somewhat difficult for me to draw. So let's talk about. Okay, let's continue with the uptrend, right? So now, this uptrend, we will see a break of structure. Alright, so we are going to see a break of structure. Sorry, no, I haven't clicked it. So we call this a break of structure. What do you mean? It's breaking it, right? What kind of nonsense is this? So now this is what we call a break of structure. It's breaking the previous high, and creating another new high here, right? So any uptrend that doesn't see a break of structure is not a proper uptrend. You must see a break of structure. It must break a high, right? And it must not break this low. If it's breaking this low like this, the trend is somehow invalid. So let's move it. I don't know. If it's breaking like this, something like this, it's totally invalid. But if it's breaking like this, is what we call liquidity. So we now call this. Is it this? Yes, we call it a protected low, right? So liquidity means it's just it's something for stop loss. That is what it's all about. It's taking the low. You know, many people are putting their stop loss. Yeah, right. Many people are putting their stop loss. Liquidity just happen and take everybody out of the market and move its way. Hope you understand. So that's what we call liquidity. Yes. So we call this a protected low, right? So this low to be very, very hard for the market to break it again if it actually come back here, right? So I hope you understand. So this was uptrend look like. So now let's still move on, right? So we'll talk about market breaking of structure. Let's look at downtrend. What downtrend is all about. We're just increasing, we're decreasing. What is happening? We're 15 now from 2019. A minute. So I'll be bring water for me. Let me just drink. My mouth is dry. Now, let's draw a proper downtrend. Let me move all this nonsense on the screen. Now, a downtrend is consisted of high, lower high, lower high, lower low, printing series of lower lows and creating creating new lower lows and printing series of lower lows. Now let's draw it. In a downtrend, please knowing how to draw a trend line is very, very essential. So we move like this, we come down again, breaking the previous low and not breaking the previous high, right? Then we break another low again and we keep moving like that. Guys, a minute. Hold don't try now. I mean, yeah, for the 9 minutes, I'm a little thirsty. So let me just drink water. So now let's continue. Now you can see our break of structure for the uptrend, right, is up. Right, for a downtrend, you actually see the break of structure down. Sorry, I don't input it very well, but there's nothing new. Just teaching you guys. So now the downtrends, this one have to break of structure. Yes. So I'll actually draw it to break of structure. Oh god. So now you can see it's breaking. So now this is our high. Let us put it like this. This is our high. Let's text this. You guys hope you are listening. Because I don't know when I will do this again. Ah. No, it's always busy bringing my time like this. Hope you are listening for free. So we got this the high. We got this the lower high. Lower low, sorry. What am I saying like this? We got this lower low. Let's use that LL. Alright. This is lower low again. So you can see it's bringing series of lower low, breaking lows and creating new lower lows. Creating new lows. So now because this is the lower high, yes, I don't want to speak upon lower high, and we also call this the lower high. Hope you understand. Hope you understand. Hope you understand. So now what you have no downtrend, you have also no uptrend. So now let's look at sideways trend. So sideways trend, I also call it a ranging trend. Anyone. English is English. So you move like this, right? Move like this or move down. Anyone. Move like this again. Move like this again. Move like this again. Move like this again. Or just move a little bit like this again. Move like this again. Remove like this again. See, hope you understand. So this leading trend, it doesn't have any proper trend. This is not an uptrend. This is not a downtrend. We just call it a ranging trend. You see it's moving sideways, sideways. So my assignment for you is identify these three type of trend. Go to any of the currency pairs, have to issue currency pairs, right? So either GBUSD, UUSD, any of the time frame. We have the 30 minutes time frame, we have the 15 minutes, we have the 1 hour, we have the 4 hours, we have the daily time frame, we have the weekly time frame, we have the monthly time frame. Hope I'm not rushing. Hope I'm not rushing, guys. So now, let me just okay. So now this is high. You can see this is high. Don't mind my draw audio highs. One come up, one come down. But because it's a equal high, this is equal EH, right? Now we call this an equal low. You can see everything is equal. Don't mind me, I just draw it like this. Everything is equal. Equal low, EL. Yeah. So this I doesn't want to break. This low doesn't want to break. Hope you understand. So this is what we call a ranging market. So we'll look at uptrend, we'll look at downtrend, we'll look at sideways trend. Now let's go to the main one for tonight's class. It's what we call market structure. So in forex trading, you don't know market structure, you don't know trend line, you haven't started forex trading. That was I was able to understand, explain what market structure is all about from what trend line is all about from A to Z. Hope you understand. So if you have any question, just please let me hold your question for the end of the class. Right. Now, market structure. Sorry, wait. I'll actually see what I wanted. Now, the main market, no, Ah, that's actually pretty safe. Now let's talk about the main thing we are here for tonight. It's what we call the market structure. So it's what we call the market structure. So in under market structure, it's divided into three. We have the swing structure, we have the substructure, we have the minor structure. Hope you understand. So now that is when we move to trend line, right? So that's when we move to thank you. So you guys are actually following. That's when we move to trend line, right? So trend line is, let's talk about the swing structure. So the swing structure is the main trend of the market. The swing structure is the main trend of the market. Hope you understand. It's the main trend. So you have to identify what is the main trend of this market. Is it downtrend? Is it uptrend? Is it a sideways trend or a ranging trend? Right? So now let's, for example, I don't want this to clean. I don't want this to clean. Okay, I'll actually draw it here. Right, so let's use the uptrend for example. Let me remove all this. Let me remove all this. Now this is what we call an uptrend. Let's say this is a swing structure. Our overall trend is an uptrend. Right? Why did I draw an uptrend here? Gold is actually an uptrend. So we are going to analyze everything in the chart. So this is an uptrend, right? So in a swing structure, patterns create series of higher highs and higher lows. Hope you understand. So this is a swing structure. What I drew here is actually a swing structure. The one I'm explaining then is that this is the main part, and if you don't understand it now, you can't understand it forever. So make sure you understand it now, once and for all, right? So this actually is the main trend of the market. It's uptrend. So in an uptrend, market must create a low in an uptrend, and it must also break break an high in an uptrend. So markets move like this. Markets move like this. Sorry. Yes, markets move like this, right? It moves up. Hope you understand. So what I'm waiting for is for market to come back down here, somewhere around this point, right? Before cashing it at the next high, before it's moved like this, right? So you waiting for it. Let me just drop this one. Sorry. Okay. Sorry, like I'm drawing it like this. No, this trading view. Now you waiting for it. What am I saying? Yes, you waiting for it to form on that high, the next move of the market, right? So it's come back to this low, but not breaking it. You can see it. You wait for the market to come back to this low, almost to this low, but not breaking it. So the main move you want to catch is what we call the minor structure. We are going to talk about the substructure first, but let's talk about the minor structure. The main move you want to catch now uptrend is this buy you want to take. This up buy that is going to break a structure, right? So the main move I want to catch is this buy here. Hope you understand. So I actually wait. Market does something like this. Let me delete it. So you understand? Markets come down, go up. So once it goes up like this, I actually wait for it to come down. So somewhere around this point. Then put my stop loss. Target is like this. This, like, my strategy is very, very simple. I don't draw all the different things in the chart. Very, very simple. Market structure is all you need to be profitable, right? So put my stop loss a little bit above this low, right? Because liquidity can happen. That's what affects me in my loss trade today. liquidity just take us out because I was trying to just buy stop loss. And not even me, myself, the people I used to send signal for, I always careful about their capital, so I always give them tight stop loss so they won't be losing much. So I want to break market to come back here, and once it come back here, trigger my entry, and you can see it's just like market start from loss, right? It can go up like this, come down, then we see something like this. So sometimes market doesn't even go up immediately like that, but let's say it just go up like that, right? Then it break this structure. Why am I putting my take profits here, right? So I beg, don't mind those Nigerian, sha. I'm just rushing, so my PC won't off. So why am I putting my take profit? This is an high, right? I'm call this a resistance level. Market might react to it, so I don't want a case that market get to this high and get back to my stop loss. Hope you understand. If I want to take it to the next high, I'm sure that it's going to break the structure. I want to take it to the next high. I should have secured a path. This will be my TP1, and I can extend my TP further for TP2. But actually secure path profit here at 1 and set my break even. That is very, very simple. So this is what we call a minor structure. Now let's look at a substructure, which I won't even encourage anyone that is trading under me to take. But if you feel comfortable with it, you can see now, this is what I've been doing. You can see it now. So this low, I'll wait again for market to come back a little bit to this low. It's very, very simple. Then take a buy. Why? Because the overall trend is what? An uptrend. If I check the daily time frame now, this is the daily time frame. You can see the overall trend. You can see now the market is shooting upwards. You can see the overall trend. I don't take sales in gold. I never do that. If I'm taking sales, I'll be losing. And you can say, okay, I'm just taking buy. So you'll be very, very like wise taking your buy, right? You can take your buy when gold just starts reversing. So you're trying to correct. So let's talk about it. This is an uptrend. You can see market have been moving up, and gold is actually a bullish instrument right from times. Since when it started, it has been always moving up. That's why people advise you to be buying gold, right? Because gold will keep going. And I told everybody that gold is getting to 4,000. You can see this is the price. Gold is getting to 4,000 this year. Yes, gold is getting to 4,000 this year. So you just have to be wise about it. So now you can see the market is what is in a uptrend. The overall trend is the market is uptrend. That is what we call the swing structure. Now let's talk about the substructure. Wait. See, I'm now sweating. Are you guys following me? I should not see 10 here. Thank God, 20. So now let's talk about the substructure. So I'm sweating. So I'm not going to see 10 in class. The substructure now. This is the market move. Let's say the market is moving like this. Then break this high. Create. No. Okay, let's continue. Come back. Create. So now it break this high and create new high. Right. So you know the market is coming back here. Market is coming back here. So and you want to make money, but you have like 2 hours to make money. I wish I have no advice. You just wait. So the market is now uptrend. So markets actually correct. That is what we call a correction phrase. We want to correct this buy that it did, like this instant buy. So we can't just see green candle. We have to see green and red, right? So that is what we call the substructure. That is a trend inside the main trend. So on lower time frame, we call that a downtrend inside. So in the lower time frame is actually a downtrend, while in the higher time frame the trend is uptrend. So a correction phrase happens something like yes. something like this now, right? You can just want to take this sell. This is your this zone they are waiting out for, right? So something like this happen. So you want to take this short sell, like you want to just take it like fast, right? You want to just make money sharp, because you know the market is coming back. But what I do, most of you see my trade. Me, I don't want to take a trend out because we don't know when market is going to be done with the correctional phase, right? Because it's a correction, you just want to correct this buy and still move up and break this high. Hope you understand. It's just guiding you momentum. I'm selling. So people are asking, go to sell. People, before you know it, to disappoint everybody and move up. What happened today? People are saying sell. I was like, oh God. So it's just disappoint everybody and push up, boom, right? So some people will, okay, I've taken the sell. Some people will not be fast to take the sell because they think the market is still going up. So they won't see this soft structure on time. So let's say they see it around there. No, I should not be using up. Let me use down. Let's say they see it around here. And yeah. They want to sell. Good that started and out in a downtrend. They'll sell and lose money. Before you know, they'll be in profit. Before you know, they hit that stop loss. So if you're able to sit on time, you can take it. But if you don't sit on time, just leave it. Take the normal trend. Follow the trend of the market. Buy. Let's this thing. Let me delete this thing. No. Okay, delete. So if you want to take it, say you should be fast to see it enough. If you don't see it enough, this correctional phase, it might finish. You don't know when markets finish correcting. So I just wait for the market a little bit here. So hope you understand. These are ideas on analyze my chart. In some conference, like a little bit of confirmation with candlestick patterns, candlestick formations, and all that. But the main thing is what I'm teaching you, right? So I waited for the market to get back here. So now you can see now, markets create a high, break this high, and it's coming back to this zone. And I'm just giving you signal for tomorrow. And create another high. So like this, you don't know when you go to just reach 4,000. These are it within. Let me check again. This 9. We are in 18. Well done. Free class. So my mentorship that is $150 for 1 year. Free class that I'm going to be teaching my mentorship students for me. Right? So I'll wait for it here and target this new high. Right? My TP is like I don't give short TP. I'm not afraid. I leave my market down to this point. Right? Once I get to this point, I'm forced to take partial profit and celebrate. I must complete full TP in my trade. What you understand? Don't be afraid because market can just don't decide. Okay, market come here, so I'll get into your zone. You can't just like this, no, because you're not the father. You're not the owner of the market. It's not you that control the market. Market do something like this because it's a soft structure. Also, do something like this. Move up before getting to your CP. Hope you understand. So I always wait, and as you are waiting, you can be adding more position. As it just come down, I don't advise you to. It's professional that do that one, right? So in my trade, I do have position, but I used to be very careful about it. Right, before market can start going to your direction, I'll blow your account. So if you just open it here, you can open 2 to 3 position, put TP1 here, and if market favor you and do break of structure, you get you to the next high and you make heavy money, right? So I wait for the market here and take the buy. So now there's what we call a discount, premium, and equilibrium. We call it discounts, premium, in space, and what's equilibrium. Why people just leaving and be going inside the class? Let's use it as EQ. Is it network? Network is stable today. Equilibrium. Equilibrium. Let's use equilibrium and EQ. Output is very low. So now, discount equilibrium and discount premium and equilibrium, right? So this place you're actually waiting for price to get to, right? Is what we call the discount zone. Hope you understand. Let me put it here. A discount zone. So when price gets to a discount zone, there's more possibilities it has to reverse. So, and if you not to use the discount zone, then when you look at demand and supply, right? So this is actually a discount zone, right? So this place actually the middle phrase. This middle phrase, when many people get trapped, is what we call equilibrium. We don't trade in our equilibrium market. If the market is there, we don't do anything unless we catch it from there. Right? If many people should get trapped today, people are saying, sell, those spike up, move up, take everybody's stop loss and keep moving up. It's better you don't make money than losing money in the market. What I do tell people, better you just secure what you have than losing money. You want to make more, you lose more. In the market, you have to be very, very disciplined. So if you don't see it here, and now market get this equilibrium, you can reverse from here anyhow. It may not come here. If it come here, good, it's obey your setup. If it not come here, it's actually going to, you can still plan on that setup on another time frame or another thing. So this is actually the equilibrium zone, right? We don't know if it's going to go up or it's going to come down. It's just the equilibrium. Right? This is the equilibrium zone. And this place we are putting our pay profit is a premium zone. Market can reverse from here because this is an high. If you look at support and resistance, this will be a resistance. Yes. Resistance, no. Premium. This is our picture. Also existing time. So this is a premium zone. Right? So when market gets to your discount zone, it pick up. Like one my trade, it just give me little loss. Sometimes I don't even have loss. It pick up immediately and start moving forward. Like it start moving up like normal uptrend. It's my create low, create high. So this is how I just analyze. Simple, short, straightforward, not even stress. Learning different market structure is just all you need in the financial market. Oh, sorry guys. Let's just allow it to load. Market structure is all you need in a financial market. In sales, if you are looking for sales, it's still the same thing, right? It's still the same thing. You will just get the swing structure. So in a swing structure, you are looking for in a swing structure, you are actually looking for a minor structure you want to catch, right? So the substructure is the bite it does. The correctional phase, correcting the cells. You can see now. Let's look at this now. You can see now. This is what this 30 minutes. So now this cells that is happening here is what we call a substructure, a downtrend in an uptrend. Something means under, right? Substructure. The main swing structure, which we see in the higher time frame, 4 hours, daily time frame, is the main trend of the market. So don't go against the main trend. If the main trend is giving you buy and you are selling, 50% likely that or 80% likely that you're going to use stop loss. Right? So we have stop loss, we have take profit. Take profit is when price gets to that your zone, it take you out of the market in profit. Stop loss means it take you out on the market in loss. Now, this is my take profit now. This is my take profit. I actually wait for it to create new high and you create new high and still be going up to create another all-time high, right? So market closed me out as take profits. You can see how many pips about 2,850 pips. This is what we did do here. You can see when market gets my zone, that's why you give your market your stops a little bit room to breathe, right? Liquidity happens, boom, clear people stop loss out and keep going, right? But mine was safe because my stop loss was a little bit good for the market. So I still keep on to this trade and take me out here. So if my stop loss now, my stop loss here, it take me out. This is my stop loss. As it just take me out, market start moving in my direction. You can see. So it happens sometimes, right? So take me out. As a trader, there's lose, there's losses, there's wins. How profitable you are is how your TP, your risk reward, that is what we call risk reward. Your yes, how is risk reward. So next time if we are here again, we talk about that. So how many TPs you have, how many heads of your risk management, every single thing plays. Every single thing is intact. If you have your risk management, your you have more TPs than SLs. Just count. You can see how many loss have I encountered. There's someone I go analyze on my phone. It's not on the laptop. Right? You can see profit, and my profits are not just small profit. With my strategy, with this strategy, you can use to pass any single any problem in this world. You can use to pass profits. With my strategy, if you're under me, just know that your financial you are just secure financially. Yes. So you can see. So just imagine me just losing this to the market. Losing this. Ah guys, I'll continue with my phone. Just losing this to the market. I'll be much profitable. I'll still be happy, I'll still be smiling when many people is crying because they're not profitable. My risk management is in check. My everything is in check. So if you understand everything tonight, you are not able to analyze the chart yourself, right? Please drop a one in the comment section in the interactive group. Drop a one if you understand. If you don't understand, just drop a two. Let's see how many people understand tonight's class. If I was able to deep more on and yeah, so from today, if you are able to analyze the charts confidently and predict correctly, so just drop a one, and you can be using demo to be testing your ability, right? You can be so if you actually understand how I do analyze, and you too can understand, you too can analyze like me, like a pro. Just drop a one in the comment section. If you don't understand, drop a two, and I will ask you where you don't understand, and I will go back. So we spent 1 hour. We still have 1 hour left. This is done. I was not able to try it. One. This is great, amazing. Yes, for sure. You guys understand because I beat it down so you guys understanding. One. Okay, how can I do a trend line correctly? It's very simple. So okay, so nobody no understand. Ranging markets. Oh yeah. So downtrend, correct. Uptrend. So on my screen, can you see applications? See the same thing. Same thing. No. Same thing. No. What am I going to do now? Okay, I'll just send you. I'm seeing the red mark.